Hello everyone and welcome once again to one more episode for the 100 most important questions for your prelims 2026, and this is brought to you on the YouTube channel of Drishti IAS. So in the last video or in the last episode, I must say that we all discussed about NPA, NPA, that is you can say the performing assets. We also talked about the SMAs and all. And what was very important in that particular episode was with regard to the timelines. And as I said you, that the assets can be good assets and bad assets. And those bad assets, they were distinguished as NPAs, restructuring and written off. And that NPA was as farm loans and with regard to the duration. Farm loan was short duration loans, long duration loans, short duration for true cropping season, long duration for one cropping season. And what about the duration? There was substandard. Then there was the doubtful NPAs, and then there was the loss. Substandard, always remember, it's till, you can say, from 90 days to 12 months. That is, it ends at the 12th month. So when I say 12th month, it is not doubtful, it is still substandard. But after 12 months, it becomes what? Doubtful. And then the loss where you do not have any, you can say, you do not have any thing that it will be recovered back. So with every NPA, there is a provisioning which is being done. And that is the safety buffer, provisioning. Or you can say that provisioning is only with NPAs, not up with the SMAs. And what about the SMAs? The SMAs are divided into three: SMA 0, SMA 1 and SMA 2. SMA 0, it is till 30 days, 1 to 30 days. Then 31 to 60 days is SMA 1. And 61 to 90 days, it is SMA 2, which is the most dangerous one. And what about the SMAs? The SMAs, they basically are the signals or the symptoms which are showing that there can be bad loans. That means it's basically an alert which the bank gets. So provisioning is only with the NPAs, it was not with the SMAs. Now why I'm telling all of this today? I've already completed it yesterday in the last video. I'm saying it because today, in the first few minutes, I'm coming up with the MCQs. And what you all have to do? You all have to just now get ready, and you all have to use your mind. You all have to use your whatever you did in the last class. You all have to use that thing, and you have to answer the MCQs. Like 4 or 5 MCQs I have. So let's start with that. Okay? And then today there is a surprise for all of you. And what is that surprise? You will be knowing about which bank came first and what all about the banking system will come up with that. So the first thing, an account overdue by 45 days is classified as SM0, SM1, SM2, SM2 and NPA. So there are 4 options. Sorry, I ticked all the 4 options. So the answer is not all the 4, but you can say B. So use your comment box. You can type there. As I say 5, you all have to give your answers. Okay. So this is the question number 6. Yesterday we did question number 5. This is the question number 6. Once again, I'm telling, an account overdue by 45 days. It is classified as what? SM0, SM1, SM2 as NPA. Yes, the clock goes like this: 1, 2, 3, 4, and 5. So the answer is SM1. Why? Because SM0, it is till 30 days. Now this one is 31 to 60 days, and this is 61 to 90 days, and this is 1 to 30 days. But what about NPA? NPA is beyond 90 days. That is the 91st day. It is what? NPA, non-performing assets. Got it? Let's move into the second question. Now, if the principal and interest remain unpaid beyond 90 days, the word beyond is to be seen. Is it a substandard NPA? Is it a doubtful NPA? Is it a loss NPA? Or is it still SM2? It says it's unpaid beyond 90 days. So till 90 days, it's not an NPA. But as it crosses the 90-day mark, it becomes NPA. What is the first NPA? Till the 12th month, it is substandard NPA. So the answer is substandard NPA. That is 90 days, beyond 90 days till the 12th month. And this is after 12 months. And the loss, it is unrecoverable. And SM2 is what? 61 to 90 days. So the answer is substandard NPA. Okay, hope so all of you are getting the right answers. I did not click the clock in the last question, 1, 2, 3, 4, 5. Sorry for that. So what about the question number 8? Which of these require mandatory provision by the bank? Now mandatory means it is very, very essential. Mandatory provisioning. Now the word provisioning, do you know what is provisioning? Where the bank, what it does, it sets a certain amount as aside from the total profit. Whatever is the total profit, it keeps a certain amount as aside. Why? Because it thinks that if it is going to bear loss, then it can be adjusted with that. That is what is provisioning. That is the safety buffer which the banks keep. Now, is the safety buffer with the SMAs? Not at all. Then it is with which? It is the substandard NPA. And I said you, substandard NPA, 10%. 10% is the provisioning. What about the doubtful? It was 25% till 25% till 100%. And what about the loss? It's completely 100%. That means if the doubtful is for 1 to 3 years, it's 25%. 3 to 5 years, it was 50%. And beyond 5 years, it was what? 100%. And 100% is when the loss is when the person who has taken the loan has ran away. So here the answer is C. Now, gross NPA. Yesterday I gave you a trick. Gross is something which is great. G stands for gross. G stands for great. It always will be bigger than the net. So gross is always less than net, equal to net, higher than net, or zero. It's always higher than net. So gross NPA will always be more than the net NPA, because the gross NPA involves the losses and all. Okay? Then there is a thing, this particular act, yesterday I named it, but I just in the last video I named this act, and I said you that this is a private recovery agent for the banks. It acts as a private recovery agent, and it's SARFAESI. SARFAESI. SARFAESI is what? SARFAESI is securitization, reconstruction of financial assets Enforcement of Securities Interest Act 2002. Now, I would say each and every student, please remember this is a very big name. Now, what can happen is that they can trick you with this name. Instead of financial asset, they could say something else. So what will happen? They'll say which is the right one. So you have to remember the name. S stands for securitization, and reconstruction of financial assets and enforcement of Securities Interest Act. When it was enacted, 2002. And I said you, it is just like a recovery agent. Now, without the courts, it acts. So it gives a notice of like 60 days and all to get to the borrower. So here it is, this act, banks can recover dues without court only from SMA accounts, NPAs or overdue accounts, or only loss assets. Yes, what is the answer? Now this one is only for the NPAs. Dekho, bank, they cannot touch the SMAs without the court. The banks, they cannot touch this SMA without the courts, because it's still not an NPA. It is just an alert. So the borrower can say, oh, I was going to pay it, so you don't have trust on me. So the borrower will say like that. So it's only for the NPAs, not for all the overdue accounts, your loss assets. It's only for the NPAs, because loss assets are already lost. They are already unrecoverable. So there is no thing with regard to that. Now what about question number 11? I'm not going to answer this question. This question is a surprise question for all of you. Now this question, the answer I'll give you in the next video. It's an account is classified. It says an account is classified as SMA2. After how many more days does it automatically become NPA? 30 days, 60 days, 90 days? It doesn't. SMA stays forever. So you have to come up with the answer. It's a tricky question. Don't think it's very easy, because see the options. It's telling that the account is an SMA2 classified, and how many more days does it automatically become NPA? That is a question. I'll be coming up in the next video with this answer. So it's a surprise one. Think about it. But this one, let's do it. Consider the following statement. A loan overdue for 85 days. Loan is overdue for 85 days. So is still SM2? Yes, it's a true statement, because SM2 is 61 to 90 days. And if it crosses 90 days, that is on the 91st day, it becomes NPA. Yes, not on the 90th day. The 90th day, it is still SM2. On the 91st day, it becomes substandard NPA. That is what you have to remember. So both A and B are right. So how was the session? Come on. You can give a thumbs up or a like to this particular session with regard to the MCQs which we did. So did you like it? Come on, give your reply on the comment box. And don't forget, you have a surprise question and you have to attempt that question and be with the answer for the next video. Okay. So as I said you today, I'm going to discuss everything about the banking. Nothing very much specific, but yes, we know that a lot of banks are there in India, but we don't know when it was formed, who was the first governor of RBI, who was the first Indian governor of RBI, whether Sanjay Malhotra, who is the present governor, whether he is the 25th or the 29th or the 50th governor of India. So things like that. Even in a checkbook, in a check, there are numbers written there. How many numbers are there? Then what about the first three digits? What about the last three digits? This you all have to know it, because it's all UPSC. Anything can be asked. So everyone, always remember, RBI's one of the main function is lender of last resort. Do you know what it is, that lender of last resort? Lender of last resort is like, think of yourself. Now you are in a trouble. Where would you go? You would go to your friends. You would go to your very special neighbors. And at last you will go to whom? To your parents. So they are the ones who will help you in the last. They will never say you no. Why? Because they are your parents. So that's why I always say that anyway, the parents are parents. They would never say no to their child. So that is what is the lender of last resort. The RBI is a parent, is an apex bank. And the children of the RBI are the commercial banks, the cooperative banks and all. So I won't say cooperative banks, but yes, the commercial banks. The commercial banks, if they are in a need of money, then whom would they go to? All the doors are shut, so they will go to the RBI. That's it. So that's why RBI is the lender of the last resort. So all of you must remember that anything can happen in your exam. So always prepare for the worst. Okay? Never think that, okay, we have done everything. There is something which is still left, but you have to find out what is left. Okay, so not wasting any time, let's go into the, oh, I had more questions, but still not that much time is left. So I'll leave these questions now. So let's go with some of the few, you can say, what do you say? Nowadays they say static GK, like that. Okay, so development of banks in India, if you see commercial banks, all of us know that there are apex bank, there is one apex bank, RBI, there are the commercial banks, there are the cooperative banks and so on. So bank is what? Bank is nothing else, but bank is a financial institution. It accepts deposits from the people. I'm talking about commercial bank. I'm not talking about the RBI. So it's a financial institution, accepts deposit from the people, and it lends credit to the people. Now, when it lends credit to the people, that is when the commercial banks, they earn money. So commercial banks never do anything free of cost. For everything, they want profit. And that profit which they earn, that is what is their, you can say, income. From that only the bank runs everything. All its salary it gives and everything it runs whatsoever. You must remember, it was the Bank of Hindustan. It's not Hindustan, it's Hindustan, which was there in Calcutta. The first bank in India, it was Bank of Hindustan in Calcutta, 1770. And it was on the European banking system. Got it? 1770, Bank of Calcutta, and that too on the European banking system. Then after 11 years, 1881, then the Awadh Commercial Bank came, and it was the first bank established and operated by the Indians. So the first bank operated by the Indians and established by the Indians, it was the Awadh Bank, 1881. And what about the 1770? This was a bank which was established in India, but it was not operated by the Indians. It was on the European banking system. And 1894 came the Punjab National Bank, which we call it as PNB. So it's the first bank of Indians to be fully managed by the Indians. So listen, just look at the third bracket here. Now what you people can do is that you can pause the video. That's why I'll move here. You can pause the video. You can copy it down, because these are something which can be very useful to you in any of the exams. Okay, so let's move into the next slide. What about this? This is 1921. 1921, we can say Imperial Bank of India. Imperial Bank of India formed by what? This Imperial Bank of India, it was formed by combining nothing else, but it was formed by combining the other banks. Okay? And this Imperial Bank of India, it nationalized, that is, nationalization happened in 1955. Nationalization of it happened in what? 1955. And what about 1888, 1881? We also find Bank of Bombay, Bank of Madras, and so on. But what is the very important thing? The very important thing is there are 14 banks which were nationalized in 1969. And 19th July 1969, 14 banks were nationalized. Now you should know what is nationalization of the bank. They were put under the government's control. That is a very simple language in which you can understand. Anything put under the government's control, that becomes a nationalized bank. That means the operation, the management and everything is under the government's control. So the nationalized bank are the Dena Bank, the Indian Bank, the Syndicate Bank, the Allahabad Bank, Punjab National Bank, Bank of India, Bank of Baroda. You can see the n number of names, but how many are there? This one you have to remember, that is the 14 banks were nationalized in 1969. Then 15th April 1980, the 6 more banks, they were nationalized. 6 more banks, they were nationalized. And which were the 6 more banks? One was Andhra Bank, Vijaya Bank, then Oriental Bank of Commerce, which is OBC, then the Corporation Bank, the New Bank of India, and the Punjab Sindh Bank. So 1, 2, 3, 4, 5, 6. 6 banks, they were again nationalized in 1980. So 1969, how many banks nationalized? They were 14. 1980, there were 6 more. So how many banks get nationalized? 20 banks got nationalized till 1980. And the deposits in this bank, they were either equal to or greater to than 200 crores. Okay, then what happened was that 4th September 1993, there was a merger, and the merger was the Punjab National Bank and the New Bank of India. These 2 banks, they merged each other, Punjab National Bank and the New Bank of India. Then 2017, SBI, it merged. 2017 SBI merger. This is what is the table with regard to the merger of SBI. That is, with SBI, what are the banks which merged? And in 2019, merger with Bank of Baroda. That is Bank of Baroda. These are the banks which merged with Bank of Baroda. So do not get confused. These are the banks which merged with SBI. These are the banks which merged with Bank of Baroda. Then in 2020, nationalized banks, they merged. 2020, there was a merger of the nationalized bank. And in this we can say Punjab National Bank, it became the 2nd largest public sector bank. And how it became the 2nd largest? It merged OBC and the United Bank. That means with Punjab National Bank, now OBC and the United Bank, they both have merged, and it has become the 2nd largest public sector bank. Now Canara Bank, it merged with what? It merged with the Syndicate Bank. And the Union Bank of India, UBI, it merged with the Andhra and the Corporation Bank. So these are the names which you have to remember. Now PNB includes in it what? OBC, Oriental Bank of Commerce, and the United Bank. Canara Bank, it includes the Syndicate Bank, and Indian Bank, it has merged with what? The Allahabad Bank. And in India, there are 12 public sector banks. Remember it. 12 public sector banks. And out of that 12 public sector banks, 11 nationalized banks plus the largest bank of India, that is the SBI. And the 2nd largest national bank of India is the Punjab National, and the first is the SBI. So let's see the things. Punjab National Bank, 1894, you have to remember the year. That's why I have made the year in red. Headquarters, you have to remember, it's New Delhi. Canara Bank, it's 1906. The headquarter is in Bengaluru. Bank of India, it's 1906. Headquarter is Mumbai. Indian Bank, 1907, the headquarter is Chennai. Punjab and Sindh Bank, 1908, the headquarter is New Delhi. Bank of Baroda, 1908, the headquarter is Vadodara. Now, why do you need to know about the years? They can ask you the chronology, either ascending or descending. So anything can happen. That's what I am saying. Anything can happen. It's a competitive exam, so you have to prepare for the worst. So the years you must know. Doesn't matter if you don't remember the day, date, but the years you have to remember. And also its headquarters, because always in our mind we have that, okay, New Delhi or Mumbai can be the headquarter. No, there are Bengaluru, Chennai, Vadodara. Bank of Baroda, see, its headquarter is what? Vadodara. In the same way, Central Bank, 1911, its headquarter is Mumbai. Union Bank of India, 1911, headquarter, you can say Mumbai. Bank of Maharashtra, 1935, headquarter Pune. Indian Overseas Bank, the 1937, headquarter Chennai. UCO Bank, its 1943, headquarter Kolkata. And SBI, 1955, headquarter it's Mumbai. That is the largest bank. So how many banks? 1, 2, 3, 4, 5, 6 here, and 1, 2, 3, 4, 5, 6 here. So 2 pages, 12 banks. How many public sector banks are there in India? There are 12 public sector banks, and the largest public sector bank is SBI, and the second largest public sector bank is what? It's the Punjab National Bank. And please remember the year you have to remember, and also the headquarters. This is very important for your exams. Now, there were 2 schemes which are very important with regard to the banks. One is the lead bank scheme. This lead bank scheme, it was launched in 1969, and it was the recommendation of the Gadgil Committee, and it's nothing else but to prepare a district credit plan for identified districts. That means this lead bank scheme, it is nothing else but it had to identify, there were identified districts. Now for those identified districts, it had to prepare a district credit plan. Now what about the private sector banks? There are 21 private sector banks, and the foreign investment in these private sector banks, there are 74%. Now the private sector bank, ICICI, HDFC, Kotak Mahindra, Yes Bank, Axis Bank, these all are private sector banks. Now in India, apart from public sector banks, private sector banks, there are cooperative banks also. The state cooperative banks also, the central district cooperative banks also. State cooperative banks, they are the top cooperative banks of the state, and they provide loans to the state government and to the general public there. Then the central or district cooperative banks, their work area is limited to only one district. Because it is a central district cooperative bank, so here its work area is only for one district. So what it does is that it acts as a bridge between the state cooperative banks, okay, and that of the people. So it's a thing which you have to remember. Then there are primary agricultural cooperative committees. Now these primary agricultural cooperative committees, they are created by the individuals, and they are in villages or field, at least 10 members, just like the self-help groups. At least 10 members, and they provide short-term loans for agricultural activities. So these are something which related to the rural areas. What about the urban cooperative banks, UCBs? Their number is 1,454. Now, this number can be changed also. So please don't go by the numbers. The number can even change. I'm not saying that the number is exactly the same. It can be either up and down. And in these urban cooperative banks, there can be MSMEs. They provide loans to MSMEs, retailers and all, and their area of operation is metropolitan cities and semi-urban areas. These are something which you have to know, not in detail, only what is given here. Then there are multi-state cooperative societies. Multi-state in the sense they are present in few states, more than one states. So they are registered under what? Multi-State Cooperative Society Act 2002. Now there are foreign commercial banks in India. Number of foreign commercial banks in India, it's 44, and the major ones are the HSBC, that is, then the Deutsche Bank, which is of Germany, then the Bank of Nova Scotia of Canada, American Express Bank of America, Standard Chartered Bank of Britain. You have to remember, these are the very important. And self-help groups, I said you, that is what happens is that this is nothing else but the women of that area, they come together, they pool in their money like 20 rupees, 25 rupees and so on till 100 rupees. And what they do is that they help each other and they take a bit of interest also. And when this amount accumulates, they deposit as fixed deposit in the bank, and from the bank they can take out the loans and they can help each other. So with regard to day-to-day activities, these type of things are being used. So SHG you have to remember. Now, when we talk about RBI, everything completed with regard to the commercial as well as to the cooperative banks. When it comes to the RBI, monetary policy, already I have said you what is the monetary policy, qualitative, quantitative and all. 1926, recommended by Hilton Young Commission as the central bank. 1926, the Hilton Young Commission, it recommended with regard to the central bank. 1931, recommended by the Banking Inquiry Committee. 1935, established, that is 1st April 1935. That means when was the RBI established? 1st April 1935. But what is the evolution behind that RBI? 1926 and 1931. 1926, the Hilton Young Commission, they recommended that the central bank should be the RBI. Then the recommendation by the Banking Inquiry Committee was also there. And then the RBI, under the RBI Act 1934, the RBI was established 1st of April 1935. And the role of the Central Bank of Myanmar, it was also playing the role of the Central Bank of Myanmar till April 1947. Now, how much of you know about this? That our RBI, that the RBI of India was playing the role of the Central Bank of Myanmar, what we call today as Burma. Not Burma, not today. Earlier we call it as Burma. Until April 1947. How much of you knew about it? Naina? Most of you did not know. So you must know this. Then nationalization took place on 1st January 1949. And the first governor, you can say Chintamani Dwarkanath Deshmukh. Remember it? Chintamani Dwarkanath Deshmukh. Am I right? Dekho, I'm moving out. What you can do is that you can wait. So he's the first Indian RBI governor. Remember it. He's the first Indian RBI governor. He served from till 1949. So he was there, first Indian RBI governor. Then first governor of RBI, he was an English, Sir Osborne Smith, 1935 to 1937. Osborne Smith. Then Sri Chintamani Dwarkanath Deshmukh, he was the first governor 1943 to 1949. And the present governor is Sanjay Malhotra. He is the 26th governor of India. Of the RBI, sorry, not of India, of the RBI. Sometimes what happens is that you by mistake, you say something wrong. So don't take it. Otherwise, what happens, we have to complete everything on time. So there is a thing going on. So he's the 26th governor, Sanjay Malhotra. And the headquarters, that is before 1937, RBI headquarters was Calcutta. At present, the headquarters is what? Mumbai. What about the regional office? 33 regional offices of RBI. And the local board office is in Mumbai, Kolkata, Chennai and New Delhi. Very important for you to know all of this. Okay. Then comes the managing structure of the RBI. This is very important Managing structure means there is a central board of directors in the RBI. And that central board of directors, how many members? 21 members. 21 members in the central board of directors. Let's see who are those members. One is the governor and the 4 deputy governors. So 1 governor and 4 deputy governors. 10 executive directors, and these executive directors, they are appointed by the central government, and there are 2 government officials nominated by the Ministry of Finance, and there are 4 directors, each from 4 local boards, that is Mumbai, Kolkata, Chennai and New Delhi. So how much? 4 plus 1, 5, 5 plus 10, 15, 16, 17, and 17 and 4 comes to 21. So how many are the central board of directors? 21 members, 1 governor, 4 deputy governors, 10 executive directors who are appointed by the government. Then there are 2 government officials who are nominated by the Ministry of Finance, and there are 4 directors, each director, each local, you can say board, that is Mumbai, Delhi, Kolkata and Chennai. All the 4 metros has a local board. Everyone sends 1 director, so it becomes the 4 directors. Okay. Then functions, as I said you, functions may, we can say कि under minimum reserve system, total minimum reserve is 200 crores and gold worth rupees 115 crore, and also foreign securities worth 85 crores. This is what is the minimum reserve. Under that minimum reserve system, this much must be the reserve with the RBI. 200 crores, 115 crores gold and foreign securities worth 85 crores. Now, issue of notes. We all know that the RBI has the monopoly with regard to issuing currency notes. When I say monopoly, that means no other organization in India can issue currency notes. But when it comes to creating of money, RBI does not do. The creation of money, the money multiplier which we talked about, it is the role of the commercial banks. But how much money will the commercial bank extend as loan and how much it will keep as the reserve, that is all decided by the RBI. So RBI is nothing else but it is the regulator also and it is the facilitator also. But in present scenario, after the liberalization, privatization, globalization, RBI, it became a facilitator. Otherwise, earlier, RBI was only the regulator. So the monopoly to issue currency notes is only with the RBI. And I did say you, the 1 rupee and the 2 rupee, you can see that short video which is there on the YouTube. Easily you can find out that when it comes to the coins, when it comes to the 1 rupee note, it is only done by the Ministry of Finance. But when it comes to more than 2 and more than 2 rupees, it's all done by the RBI. And RBI, it also acts as the banker to the bank. Banker to the bank means we all know that the banks, they depend upon the RBI. How come they depend upon the RBI? You all know that each and everything whichever the banks do, it's all been decided by the RBI. But yes, the lender of the last resort, that is very, very important. Then the custodian of foreign exchange rate. Custodian of foreign exchange rate, or you can say custodian of foreign exchange. That means I cannot say foreign exchange rate. Custodian of foreign exchange. Whatever is the foreign exchange which government of India has or our country has, it is all with the RBI. Because it is government's bank. It is not our bank. It is government's bank. So whatever transaction we do with the commercial banks, the same time the government does the same type of transactions for the commercial bank. Whatever role the commercial banks play for us, play for the individuals, the same role the RBI plays for the government, that is the central government. So it's a custodian of foreign exchange. Then it's also collection of data and publication, whatever data and all with regard to banking and all the data and publication, all is done by the RBI because it is the apex bank. And it regulation and control on the banking system. That means whether giving licenses or taking away licenses, it's all directed by the RBI. Then it acts as a banker to the government. We all know RBI, that is the central bank, it is banker to the government, it is the agent of the government, it acts as an agent, and it also provides advice to the government. Whenever it is with regard to financial matters, the RBI can provide guidelines. Then protection of foreign exchange reserve, again the same thing came up, sorry, represents the government in international institutions like IMF and World Bank. That means who is the representation of India in IMF and World Bank? It is the RBI, that is the representatives of RBI. And it also helps in price stability and development work. I said you, when we were talking about economic growth all depends upon price stability. And who is going to do that price stability? It is the RBI. The RBI, how it does that price stability? It is through the monetary policy, that is the monetary tools, that is the qualitative as well as the quantitative tools. Okay. Then after that, we saw the Monetary Policy Committee, need not tell you, 29th September 2016, it was established on the recommendation of the Urjit Patel Committee. You know who was the governor at that time. Yesterday I said you, Raghuram Rajan, and the chairman was RBI governor. Number of members 6, 3 members from the government, 3 members from the RBI. Then where are the printing institutes in India? One, the Bank Note Press, 1974, it was formed, and it is in Madhya Pradesh, Devas. It prints bank notes from 10, 20, 50, 100, 200 and 500. Then the Security Paper Mill, 1967 to 68, it is Narmada Puram, Madhya Pradesh, produces bank and currency note paper. Then Modern Currency Note Press, 1995, it's in Mysore, Karnataka, and Salboni, West Bengal. It's the modern currency notes. Nowadays, whatever currency notes, it comes from here. Then the coin never is printed, it is minted. Minting of coins happens because there is a pressing taking place. So minting of coins, it's done in Mumbai, Kolkata, Hyderabad, Noida, and that is minting of coins. Okay. The same way, currency note press is there in Nasik. It prints banknote rupees 1 to 100 rupees. Indian Security Press, that is 1992, Nasik, and it prints postage stamps also, postal orders also, and all the official documents. So it's Indian Security Press. And the Security Printing Press, 1982, it's in Telangana, that is Hyderabad. It prints Central Excise stamps. Here I'm telling also about the stamps which comes under all of this. Then the Liquidity, LMF, this is very, very important. LMF 2014, it commenced, amended 2020, and the bank repo borrowing, repo was what? Repurchasing agreement. The bank's repo borrowing should not be more than 1% of its NDTL per day, and the bank cannot borrow more than 2% of its NDTL account. So liquidity management framework, this is very important, amended 2020, should not more than 1% of its NDTL, and a bank cannot borrow more than 2% of its NDTL amount. And marginal standing facility, yeah, I had said you, it's a short-term loan to banks by the RBI, marginal standing facility, and that too on events of emergency. Then SDF, it was Urjit Patel Committee which introduced it. 8th April 2022, allows RBI to accept short-term deposits from banks without providing any collateral, and the banks, they can withdraw anytime the amount as well as the interest. Then liquidity adjustment facility, LAF, repo rates or the reserve repo rates operation. And then the base rate, this is very important, introduced by RBI in 2010, that is the banks cannot lend below this rate. That is what is the base rate. Okay. And what are the assets with the bank? The deposits of banks with RBI, the loans given to the banks, the investment in the government securities, and the investment in the share capital. These are the assets with regard to the commercial banks. And the liabilities are the demand deposits and the time deposits. The demand deposits can be the saving deposits, the current deposits, and the time deposits is all with regard to the fixed deposits and all. So these are the liabilities, these are the assets. So overall you are getting a revision of everything. Then external benchmark lending rate. This was introduced in 2018, external benchmark lending rate. And the RBI, it mandated that the floating retail loans be linked to external benchmark lending rate such as the repo rate. Now what about the priority sector lending? Now this is something which you have to remember. When we are talking about the priority sector lending, then the RBI, what it did was that it mandated requirement of banks to allocate or set portion of their loans to key priority areas. So portion of their loans, they said that the banks should keep for the key priority areas, that is for inclusive growth. And this can be for agriculture, education, housing, micro and small enterprises, export credit, social infrastructure, renewable energy. These you can say. And the banks must lend at least 40% of their adjusted net bank thing. ठीक है, and agriculture जिसमें 18%, micro enterprises and all. I'll give you a separate lecture on this, don't worry. Okay, I'll give you a separate lecture on that. Now there are various planning payment schemes. NEFT, you know, National Electronic Fund Transfer System. What is NEFT? National Electronic Fund Transfer System. And it was launched in the year 2005. No limit prescribed by RBI. Limit may be set by the individual banks. That means the individual bank can set the limit. But the RBI has not set any limit with regard to NEFT. And the usage is that the bank branch or internet mobile banking can be the usage. And available 24/7 into 365 days. What about the RTGS? Already discussed. It is the real-time gross settlement system. Launched 2004. Minimum limit 2 lakh rupees. Maximum limit no limit. And what is the availability? Bank branch 24/7, that is 365 days. And there is no fees with regard to RTGS. You must remember 2019, after the fees was removed. Then UPI, very important for nowadays. Unified Payment Interface. How much of you knew the full form of UPI? Just be honest with you. UPI, Unified Payment Interface. Launched 2016. Online solution system. Examples like Bheem or Phone Pay and all. And limit is 1 lakh. A form of instant payment service available 24/7. And IMPS. Now when I say IMPS, it was launched 2010, minimum limit 5 lakh rupees, service provider is NPCI, and the bank branch that is available for 24/7, 365 days, mobile internet branch and ATMs are used for that. Then what about the Aadhaar enabled payment system, AEPS? AEPS is Aadhaar Enabled Payment System, launched 2016. Service who's providing NPCI, a bank-based model, and using Aadhaar authentication, what you can do, online interportable financial transaction. Then there is a Bharat QR. This is a QR-based payment solution. There is a QR created, and from that you are doing the payment. And the payment, it can be done through UPI, and usage is mobile banking app, 24/7 is the availability. What about card payment system? Use of debit and credit cards, cashless transaction facility. Example, that is the point of sale is somewhere else and you are using it somewhere else. So that is what is card. That's why we can say that money is something which is a medium of exchange. And these are the tools of money, you can say. Is the National Payment Corporation of India. Established 2008 by the RBI. What is its function? Retail payment and settlement in India. All the retail payments and all the retail settlements it does, and established of a strong payment and settlement infrastructure. Got it? Clear, everyone? Now this I was talking about. See, this is the IFSC code. IFSC ka full form is what? I stands for Indian, F stands for Financial System Code. Every bank has a IFSC code. Every bank. Every bank has an IFSC code. It's a 11-digit code. It is used during RTGS, NEFT, IMPS transfer. And the first 4 is the bank name. The another one is with regard to the future use. And then the last 5 is the bank branch. Remember it. First 4 bank name. The 0 is for future use. And the last 5 is with regard to the bank branch. Okay, and there is a magnetic ink character recognition. This magnetic ink character recognition, it's a code which is written at the bottom of the checkbook. It's written at the bottom of the checkbook, and the magnetic ink and different from each bank ink. Okay, so this is what you have to remember. Then when it is with regard to the magnetic ink, total 9 digits. First 3 digits, it represents the district code, first 3 digits. Then the next 3 digits represents the bank code, next 3 digits. Then the last 3 digits, it represents the bank branch code. That is what you have to remember. This is the check number. This is the MICR code. That is, MICR is magnetic ink character recognition code. This is the RBI account code. That is, the bank has an account. Every commercial bank have an account in the RBI. So that is the RBI account code. And this is the transaction code. That is the check number. As you cannot say check number, but the transaction number which you are doing. So that is what. And what about financial inculcation? So this is something with regard to the process of connecting the weaker and low income sections of the society, such as vulnerable groups with the banking system. We all know that when Prime Minister Modi he came to power, so which was the first policy which he launched? This is a surprise question for you. Just use your comment box and type there. Which was the policy he brought with regard to financial inculcation in 2015? Yes. Okay. So this is with regard to all of the things, and yes, initiatives like 4 categories of the banks, Mudra Bank 2015, 4 categories have been launched: Shishu, Kishore, Tarun and Tarun Plus. Shishu is up to 50,000 rupees, 50,000 to 5 lakh it's Kishore, Tarun 5 lakh to 10 lakh, and Tarun Plus it's 20 lakh plus loan after the repayment of the previous loan. So this is some of the initiatives taken for financial. Mudra is one. Then direct benefit transfer, we all know that farmers and all, they are getting direct benefit transfer. Then this Jan Dhan Yojana, this is what I was talking about. See how much of you got you right. PM Jan Dhan Yojana, financial inculcation. Earlier people were not able to open their accounts. Now Prime Minister said, okay, 0 rupees you have, don't worry, you can open an account. So everyone now has an account. So that is what Jan Dhan Yojana is there. Then Micro Finance Saving Bank 1970. It was the microfinance which was the first used by Muhammad Yunus in 1977. And that is what. And Kisan Credit Card Scheme, that is also which we have to talk about. Okay, so that is all we have for today, and hope so you all loved this session. I know there were static things with regard to this, nothing very much with regard to understanding part, but yes, there are things which you have to remember also, because there can be questions with regard to such type of things which can surprise you if you don't know. So would see you in the next session, and yes, please don't forget to share my videos which are there for your economics part, and as many you share, that will be good for us. So thank you all, and thank you everyone for joining us and being a part of this. Take care. God bless you.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.